Fidelity Investments, a financial powerhouse with roots dating back to 1946, is a giant in the investment world. Headquartered in Boston, Massachusetts, Fidelity manages a staggering sum of money, nearly $5 trillion in assets under their direct control, and a whopping $12.6 trillion overseen overall. They're like a financial supermarket, offering a one-stop shop for everything from investment advice and retirement planning to trading stocks and managing wealth. Their vast network of mutual funds, index funds, and brokerage services caters to a wide range of investors, making them a go-to for both seasoned financiers and those just starting their investment journey. In today's video, we'll find out how a poor kid created the world's biggest investment company, Fidelity Investments. Welcome to Moneydocutv, a channel dedicated to entrepreneurs who risked it all to create today's most iconic brands. Let's get started. How it all started. Edward Ned Johnson wasn't your typical Wall Street hotshot. Born on Boston's posh Beacon Hill, he had a silver spoon in his mouth. Private schools, Harvard education, the whole shebang. After law school, he even landed a cushier job at a prestigious Boston firm. But Ned had an itch. While others saw the law as a secure path, Ned craved the fast-paced energy of the stock market. He started researching stocks on the side. Maybe it was a desire to prove himself beyond family connections. Instead of staying on the safe legal track, Ned took a leap. He joined a trust company focused on investing, eventually becoming their vice president. This was a pivotal moment. He was learning the ropes of the financial world, but he still had bigger dreams. Humble beginnings. The year was 1930. The Great Depression had cast a long shadow over America. Banks were failing left and right, and people were desperate to protect their savings. It was in this tumultuous time that a young man decided to take a leap of faith. With the blessing of Massachusetts Securities Director John C. Hull, Johnson launched the Fidelity Fund. It was a bold move, considering the shaky financial climate, but Johnson believed in the power of smart investing, even during uncertain times. The Fidelity Fund proved to be a beacon of hope in a storm. As other institutions crumbled, Fidelity remained steady, attracting investors seeking a safe haven for their money. This success story laid the foundation for what would become a financial powerhouse. By 1946, the company had undergone a transformation, evolving into Fidelity Management and Research. This marked the beginning of a period of continuous growth and innovation. Fidelity wasn't content with just serving the American market. In 1969, they set their sights on international shores, establishing Fidelity International Limited to cater to investors worldwide. A decade later, FIL became an independent entity, owned by its employees, a testament to Fidelity's commitment to fostering a spirit of ownership and entrepreneurship. As the company continued to flourish, leadership transitioned in 1997, with Robert Posen taking the helm as CEO. Fidelity's commitment to diversification extended beyond its services. In 2003, they launched their first exchange-traded fund. This move democratized investing. Fidelity Ventures, their venture capital arm, closed its doors in 2010, paving the way for new ventures like Volition Capital. A new chapter began in 2012 with the company relocating its Boston headquarters. This move symbolized Fidelity's commitment to staying at the forefront of the financial world. In 2014, Abigail Johnson, granddaughter of the founder, took the reins as CEO. Under her leadership, Fidelity ventured into the burgeoning world of cryptocurrency, establishing a dedicated entity for institutional crypto custody and trading in 2018. Present. Fidelity wasn't done innovating. By 2019, rumors swirled that they were about to open the door to cryptocurrency trading for big players like hedge funds and investment firms. Later that year, they launched Fidelity Digital Asset Services, a specialized arm focused on keeping crypto safe and secure for these institutional clients. They even acted as a middleman, helping them buy and sell cryptocurrencies. This move solidified Fidelity's position as a major player in the burgeoning world of crypto. Their reputation and expertise paid off. This translated to a big boost in their bottom line, with revenue and operating income reaching new highs. Fidelity wasn't just catering to Wall Street whales. In 2020, they launched Stocks by the Slice, a program designed for the everyday investor. No more needing a lump sum to get started. Even a small change could be put to work. They kept the momentum going in 2021, Fidelity announced an aggressive hiring spree, looking to add a whopping 16,000 new employees to their team. This expansion signaled their commitment to growth and their confidence in the future of investing. But loyalty wasn't just about growth. They were also pushing boundaries. In 2022, they made a major announcement. They were going to allow people to invest in Bitcoin through their 401k retirement plans. This was a first for a major 401k provider, and it sent shockwaves through the financial world. It was a sign that Fidelity believed cryptocurrencies were here to stay, and they were giving people a new way to save for their golden years. Fidelity's journey with crypto continued in 2023, making it easier for people to buy into crypto without the hassle of directly owning it. In early 2024, their gamble paid off. The Bitcoin ETF was approved and launched, making it even easier for people to invest in this new asset class. Bitcoin Lunch Program. You might think an old-fashioned company like Fidelity wouldn't touch crypto with a 10-foot pole, but they've actually been involved for a while. Their CEO, Abigail Johnson, saw the potential of blockchain technology and started exploring it, even mining Bitcoin in their offices. Back in 2017, when crypto prices were going crazy, Fidelity even tried letting employees pay for lunch with Bitcoin in the cafeteria. It turns out not many people were up for that, except the folks who were already working on the crypto project themselves. The discreet crypto custodian. Fidelity Investments might have been an early miner of Bitcoin, essentially acting as a secure vault for institutional investors' crypto holdings. This was a big deal, with BNY Mellon being the only other major player to join the game 4 years later. Here's what makes Fidelity's approach unique: more than just a marketplace. Unlike crypto exchanges like Coinbase that connect buyers and sellers, Fidelity acts as the middleman on every trade. They find liquidity providers for their clients, ensuring smoother transactions and potentially more stable pricing. A familiar face in a new world. Fidelity understands traditional finance, and they leverage that experience. Their platform offers a familiar experience for institutional investors, easing them into the sometimes wild world of crypto with a more traditional feel. Advantage: Fidelity's state trust charter positions them perfectly for the potential qualified custodian category being considered by the SEC. This could give them a leg up in the regulatory game. Staying under the radar. Unlike publicly traded companies, Fidelity flies under the radar as a private company. Fidelity's private ownership combined with their established reputation as a trustworthy custodian make them a unique player in the crypto space. They're well positioned to navigate the evolving regulatory landscape and continue to be a major force in the crypto world. Fidelity goes it alone. When the green light was finally given for these exchange-traded funds, most issuers chose Coinbase to store their Bitcoin. This included big players like BlackRock. Fidelity, while offering their own Bitcoin ETF, decided to use their own in-house custody service instead of relying on competitors like Coinbase. This might seem like a gamble, especially considering Coinbase's current legal troubles with the SEC. Fidelity sees it as a conflict of interest. We're basically offering a competing product. Fidelity's head of the ETF team, Cynthia Lobissette, believes this strategy will become less common in the future. As these Bitcoin ETFs mature, issuers will likely spread their risk by using multiple custodians. This suggests investors are comfortable with Fidelity's self-contained approach. The future of the Bitcoin ETF landscape remains to be seen. Some speculate there may be consolidation among issuers, with smaller players potentially dropping out. With fees becoming a major battleground, low-performing ETFs like Wisdom Trees, with only $60 million in inflows, might struggle to stay afloat. Will Fidelity's self-reliance pay off? Fidelity's ambitions. Their Bitcoin ETF is a hit, but that's just the first chapter. Here's the lowdown on what Fidelity's got cooking next. Ether, the new frontier. Bitcoin's the king, but Ether's the shiny new toy. Unlike Bitcoin's guzzling tons of power system, Ether uses a more eco-friendly approach. This proof-of-stake thing basically means folks holding Ether can earn rewards for just sitting on it. Sounds pretty sweet, right? Opening the crypto vault. Bitcoin and Ether are great, but Fidelity wants more. They're looking to offer trading and safekeeping services for other cryptos too. They don't want to be stuck in a two-coin corner. The problem? Regulators are still figuring out how to classify all these different cryptos, even Ethereum. It's a bit of a wild west out there. Tokenization, turning stuff into crypto. Imagine turning your money market funds into fancy crypto tokens. That's the kind of thing Fidelity's competitor Franklin Templeton is playing with. Finding the sweet spot. Fidelity's not exactly a speed demon. They're more like cautious explorers compared to crypto cowboys like Coinbase. They're finding that middle ground, carefully testing the waters of blockchain technology while keeping an eye on the regulators. They're here to stay, and they're definitely going to keep pushing the boundaries. Fidelity, a titan of many hats. Fidelity Investments isn't just a one-trick pony. Sure, they're known for their mutual funds, but that's just the tip of the iceberg. Let's dive into the different ways Fidelity serves its customers. Mutual fund powerhouse. Step inside Fidelity and you'll find a mutual fund empire. They have three main divisions catering to different investment styles: growth-focused stocks, high-income options for those seeking steady returns, and reliable fixed-income funds. Two of their biggest names are titans in their own right. Then there's Fidelity Magellan, once under the legendary leadership of Peter Lynch, who averaged a mind-blowing 29% annual return, the best-performing mutual fund ever over such a long stretch. That means investors get all the benefits of diversification without any fees eating into their returns. This bold move made investing more accessible than ever before. Your one-stop shop for investing. Fidelity doesn't just manage your money, they can help you trade it too. Their brokerage arm is a major player, but Fidelity caters to the online crowd as well, with a user-friendly platform for buying and selling stocks. They also go beyond individual investors. Through their National Financial Services subsidiary, Fidelity provides services to banks, investment firms, and even family offices. Think of them as the behind-the-scenes crew keeping the financial world running smoothly. Planning for your future. Retirement might seem like a distant dream, but Fidelity's got your back. They're the #1 provider of 401k plans, helping millions of Americans save for their golden years. Their services go beyond just managing the money. They also help companies set up and administer these retirement plans, taking a big weight off employers' shoulders. Fidelity's hidden treasures. Fidelity isn't just about stocks and bonds. They have a lesser-known arm called Devonshire Investors. Think real estate? Fidelity owns a massive chunk of Boston's Seaport Center and millions of square feet of office space. Devonshire Investors has a diverse portfolio with ventures in data centers, employment services, and even limousines. It's a reminder that Fidelity isn't afraid to think outside the box. Fidelity's charitable side. Fidelity believes in giving back. In 1991, they established Fidelity Charitable, one of the first commercial donor-advised funds. This allows people to donate to charity while enjoying tax benefits. A win-win for everyone. Inside Fidelity's private dealings. Fidelity's world isn't all sunshine and rainbows. In 2016, a dark cloud emerged. A Reuters investigation uncovered a potential conflict of interest. Here's the twist. F-Prime Capital was allegedly competing directly with Fidelity's public funds. The investigation found instances where F-Prime swooped in and invested in startups at bargain basement prices. Fidelity, due to regulations, couldn't participate in these early rounds. This created an uneven playing field. Experts weighed in, calling it a clear conflict of interest, even if it wasn't illegal. Fidelity maintained they were following all the rules. Were they putting the interests of their own executives ahead of their everyday investors? The plot thickened. The investigation revealed cases where Fidelity, after these startups went public, became major investors in the very companies F-Prime had originally funded. Legal minds raised an eyebrow. Could Fidelity's massive buying power be artificially inflating the stock prices of these companies, ultimately benefiting those Fidelity insiders at F-Prime? Fidelity remained silent on this accusation. The investigation cast a shadow on Fidelity's commitment to its investors, raising questions about transparency and fairness. Sir Paul rocks Fidelity. In a surprising marketing move, Fidelity decided to target baby boomers with a musical twist. They partnered with none other than music legend Paul McCartney. In 2005, Paul became the face of Fidelity's This Is Paul campaign. It wasn't just his image they used. Fidelity released a special compilation CD, Never Stop Doing What You Love, featuring Paul's greatest hits. It was a way to connect with boomers through their shared love of music and encourage them to think about their financial future. On launch day, employees even got a special treat, a message from Paul himself, urging them to keep pursuing their passions, while Fidelity helped them reach their financial goals. Investing wisdom beyond the numbers. Fidelity Investments isn't just a financial giant. It's a company with a rich history that offers valuable lessons for anyone navigating the world of money. Here are a few key takeaways. Innovation is key. From pioneering mutual funds to embracing cryptocurrency, Fidelity has consistently adapted to changing market trends. This lesson reminds us to stay curious and explore new opportunities in our financial journeys. Think long-term. Remember Fidelity's Magellan Fund, averaging a remarkable 29% annual return under Peter Lynch. It highlights the power of patience and a long-term perspective when investing. Don't get caught up in short-term fluctuations. Focus on building wealth steadily over time. Accessibility for all. Fidelity's zero-expense ratio funds and stocks by the slice program demonstrate their commitment to making investing accessible. This translates to a life lesson. You don't need a hefty sum to start. Even small, consistent investments can grow significantly over time. Diversification is king. From offering a variety of mutual funds to venturing into real estate and data centers, Fidelity emphasizes the importance of diversification. Don't put all your eggs in one basket. Spread your investments across different asset classes to mitigate risk. We really hope you enjoyed today's video on how a poor kid created the world's biggest investment company. Be sure to leave a like and comment below on what you loved about our video. Make sure you subscribe to our channel and hit the bell icon to never miss another great video. Until next time, we look forward to seeing you in our next video. Remember, no dream is too big.